Hi, I'm Sean Tesoro, president of Salem Five Wealth Management and Trust. Here's what you need to know about the markets in 2025. With 2025 underway, investors are wondering, will 2025 be as strong as 2024? As in sports, repeats are tough, particularly when you consider the outstanding returns we had in 2024. In fact, last year marked the first time since 1997-98 that the S&P 500 enjoyed back-to-back gains greater than 20%. But remember, last year didn't start off so optimistically. The list of worries among stock market bears included high valuations, narrow leadership by the largest technology stocks, rising long-term interest rates, election uncertainty, deficit spending, and more. But stocks rallied through all of that without so much as one 10% correction. The stock market's surprising ascent in 2024 offers some important lessons for investors. First, the herd is often wrong. Wall Street underestimated the S&P 500's year-end price by about 15%. Remember, positive years for stocks are about 3 times more likely than negative ones. Second, the trend is your friend. Employing technical analysis can help investors avoid mistakes. In an upward trending market, don't take a detour because of some bearish narrative that the market may not care about. Third, bull markets typically run for a while. They last more than 5 years on average and rarely end when the U.S. economy is growing, especially when the Federal Reserve is cutting interest rates. The current bull market is only about 27 months old. Fourth, earnings drive stock prices. The fundamental value of stocks come from a company's earnings. The S&P 500 companies will likely grow earnings 10% in aggregate in 2024 and may do so again in 2025. And finally, focus on the long term. Don't get scared out of the market by the headlines if you're a long-term investor. Time in the market beats timing the market. Waiting it out through down periods is the best approach for nearly all investors. Since 1980, the annualized return for the S&P 500 is 12.1%. These are good lessons to remember as 2025 gets underway. And as we look at expectations for this year's market, there are reasons to be cautiously optimistic. Cautious because inflation pressures could reemerge and geopolitical threats are always potentially around the corner. Optimistic because economic growth remains steady. There's a healthy job market and corporations continue to grow profits with long-term investments in artificial intelligence. Also, the potential for changes to tax policy and deregulation in 2025 could provide a bit of an economic tailwind. So while growth may not be as robust as 2024, the ingredients are certainly in place for another profitable year for investors.